What's up guys and welcome to WSM Research. Today we're looking at a space stock that has long-standing contracts with the US military and NASA. It could potentially be a great way to play the emerging satellite and space exploration industries. Before we get into the video, keep in mind that we are not financial advisors and this video is for entertainment purposes only. Make sure to do your own research and consult with a professional before making any investment decision. The stock we're talking about today is Maxar Technologies, ticker symbol MAXR. Headquartered in Colorado, Maxar manufactures communication, Earth observation, radar, and on-orbit servicing satellites, satellite products, and related services. Maxar has two main business segments, Earth Intelligence and Space Infrastructure. Earth Intelligence is the bigger segment, comprising 60% of revenue. The remaining 40% of revenue comes from Space Infrastructure. We'll first look at Earth Intelligence. The majority of Earth Intelligence revenue comes from the US federal government. Most of the use cases are military. The US Air Force, Army, and Space Force all use Maxar's services. US allied governments, including Australia, the EU, and Japan also use Maxar. Maxar operates imaging satellites which provide extremely precise imaging for mission-critical intelligence gathering. Military personnel can pull up Maxar geospatial imagery to gain an understanding of the physical environments anywhere on the globe. It's kind of like Google Earth but offers far greater precision. Maxar's geospatial imaging is extremely important for making battle plans and is therefore mission-critical for many branches of the military. Maxar's satellites provide an industry-leading resolution, which is extremely important for geospatial data. Governments and commercial customers alike are increasingly using machine learning to identify objects on geospatial images. The higher the resolution of the image, the more accurate the machine learning can be. With their satellites, Maxar is currently making a digital globe. The digital globe will be a digital twin of planet Earth in all dimensions that updates almost in real time. This can be extremely useful to both military and commercial customers. Over the years, Maxar has accumulated 125 petabytes of data in their archives. They believe that this gives them a 20-year head start against any competitor as it relates to the digital globe. In June of 2020, Maxar acquired 3D rendering company Vicron for $140 million. This acquisition is a real game changer for Maxar because it allows them to now offer 3D rendering for their satellite imagery. They plan to leverage Vicron's 3D analytics platform to provide battlefield visualization, aerial navigation, and other services in 3D. This will further strengthen their industry-leading position in Earth Intelligence. Their second segment is Space Infrastructure, which accounts for 40% of revenue. In this segment, Maxar designs, manufactures, and operates communication and Earth observation satellites, space exploration aircraft, solar electric propulsion, on-orbit satellite servicing services, and robotics for space operations and exploration. Over the company's history, they have built over 285 satellites that have been launched, and which have a combined 2,750 years of orbit time. There are multiple companies with plans to launch massive satellite constellations that will provide internet access around the globe. These companies include Intelsat, OneWeb Satellites, and Elon Musk's Starlink. Starlink manufactures its own satellites in-house, but some of the other companies buy satellites from third-party manufacturers. The boom in internet satellite constellations represents a massive growth opportunity for Maxar to both manufacture these satellites and provide supporting services for their operation. Besides satellites, Maxar is also involved in many of NASA's space exploration missions. Maxar will build the power and propulsion system for the Artemis program, which plans to put the first woman on the moon by 2024. They also build robotic arms for NASA's space rovers, including the Perseverance rover, which landed on Mars earlier this year. On March 29th, Maxar delivered a solar electric propulsion chassis to NASA for their Deep Space Psyche mission. The Psyche mission is scheduled to launch in 2022 and will visit the asteroid belt between Mars and Jupiter. Many of the asteroids are rich in valuable metals. The mission's goal is to explore the viability of asteroid mining. If this mission is successful, it could be huge. There are trillions of dollars worth of valuable minerals on the asteroids. If their extraction can be made economically viable, this could become a huge industry in the future. Supplying the propulsion system for the Psyche program, Maxar has established itself as a leader in this space and will benefit tremendously if this becomes a viable industry. From a financial perspective, Maxar offers solid fundamentals with decent profitability for a company with as favorable prospects as it has. In the past 3 years, revenue has remained fairly constant at about $1.7 billion per year. However, their profitability has increased, with their net income going from a loss of $1.25 billion in 2018 to a small profit in 2019 to a significant $300 million profit in 2020. It's worth noting that their profitability recently is largely due to their discontinued operations, which added more than $300 million to the bottom line last year. The earnings from continuing operations was about break-even over the last 2 years. In 2020, they took $317 million of profit from disposal of discontinued operations, which will most likely not be seen on income statements in the near future. This particular number was from Maxar selling off its Mda Business. In April of 2020, they sold this part of their business for $729 million. The sale of the business resulted in a $317 million one-time profit. The Mda Business was a business unit that developed and sold surveillance and intelligence solutions and components, mainly for various branches of the military. This part of Maxar's business was responsible for a few million dollars of net income in the past 2 years. By selling it off, they were able to gain a $700 million cash infusion to their balance sheet to invest in new businesses and pay off debt. Maxar is able to generate significant cash flows from its continuing operations on the order of $200 to $250 million a year over the past 3 years. This is because a significant amount of their operating expenses is in the form of depreciation and amortization, which is sometimes inflated on corporate income statements to reduce GAAP earnings, thereby reducing the income tax expense. However, it is worth noting that in the case of Maxar, they've made significant purchases of property, plant, and equipment in each of the last 3 years. There are 2 possible situations. The first is that their satellites and other equipment are wearing out to the tune of hundreds of millions of dollars worth of losses per year, which shows up as depreciation and amortization, which they have to replace, including this item on their cash flow statement. The second possibility is that their purchase of property, plant, and equipment is attributable to the cost of Maxar growing and adding to their constellation of satellites. If this is the case, then this line item should not be a problem. In reality, it is probably a combination of both. The balance sheet at Maxar is less than strong, but to some extent it depends on how you look at it. They have a significant amount of assets, including a good amount of current assets, but they also recognize more than $1.6 billion of goodwill. This is a type of asset that cannot be used to pay for operating expenses, unless they were to possibly sell off parts of their business. They also claim $900 of intangible assets, which probably includes things like patents and other things whose value is hard to determine. But the real issue is their long-term debt, of which they have more than $2.4 billion. Although it's down by $500 million since the end of 2019, it is still a significant amount of debt and incurs significant interest expense that reduces profitability. Their interest expense in the past year was about $175 million, which is down from previous years because of them paying off part of their debt. But this interest expense alone causes their profitability to suffer greatly. If Maxar can find a way to pay off its debt, whether that be by selling off parts of its business or issuing more stock, it could potentially be very good for profitability. The bottom line for Maxar is that it is a major player in space exploration that is the market leader in many areas. It has a multi-year head start in the satellite imaging industry, with many of its customers being government and military customers. These types of customers are generally considered more consistent and reliable than corporate customers, and in the case of Maxar, even more so because of their head start in the industry and small number of competitors. In addition, it has significant growth prospects in the area of asteroid mining, which opens up an entirely new industry which Maxar could be the first mover in. However, the company currently has too much debt and their business is too capital intensive for them to be making significant positive profit. Therefore, they must be able to deliver on their new business with the Space Bus in order to increase their revenue and improve their margins. If you believe that space is the next frontier for civilization, and space exploration holds the key to entirely new industries in the future, Maxar has a good chance at becoming a market leader in those new industries. And at a $2.7 billion market cap currently, that could mean substantial rewards for anyone who invests in what are still the early days.